I mean, just a leaf of what's happened in the last 24 hours and the numbers from Avenue Supermarts, from V2 Retail, from some of the auto companies as well, passenger vehicles in particular. Maybe the street was bracing itself for disappointments and they have not been disappointing, but I mean, the stocks have been on fire. Now, my question to you is, were you also in the camp that believed that urban consumption is also suffering? And are these data points a bit of a respite that maybe things could be slightly better than what the fear on the street was?
So, Niraj, I think urban consumption has not been as bad as what it is made out to be.
Okay, you think so?
I believe so. And why I say this is because when we kind of, especially we as financial market investors, we tend to think about HUL and Nestle and that pack. But the reality is that there are two shifts which are happening. One is a shift to D2C brands, which means that there are several new brands, new products, which essentially are basically getting funded by private equity, venture capitalists, and they are driving growth. And so clearly there's a shift in the consumption happening.
Yeah, you've spoken about this in the past, yes.
Second is clearly from the basics to the premium side, or the whole move towards premiumization. That's the second. And the shift in terms of trade from products to platforms, which means that no longer can the veterans just sit on their laurels and saying we have this great distribution network of millions of Kirana stores across the country. I think quick commerce has come in and pretty much disrupted the distribution landscape. So modern retail has to some extent taken away some share from the conventional Kirana stores, and now quick commerce is taking away share from the modern retail. So if you look at the numbers of the quick commerce guys, they are growing at 30, 40, 50%. If you look at the numbers of some of the names you mentioned, be it D-mart or V2 Retail, it's all in high teens, right? So where's the slowdown? And then look at the numbers of the automobile guys, the car guys. They're back with a bang.
Yeah.
So I'm just saying is if you look at all of this, then there is really no slowdown. So it's basically a situation of two halves.
But interesting. So I was talking to Sajid Chinoy on a podcast, and he was saying that the savings rate of the average Indian household has come off from the 3.5%, 3.7% during COVID to flattish levels, right? So, Nilesh, is that a natural progression because during COVID savings were high and then they would deplete and then they would again decline? And does that worry you at all from a consumption perspective?
No, it doesn't, because clearly I think today investors or savers are wanting to consume more and more, and that's the trend you will see with an aspirational India. As we all get more and more aspirational, we want to essentially consume. We want to consume the more big ticket stuff, the more premium stuff. Okay, I mean, look at the world's most successful economy, the United States. What are their savings rate? Has that stopped them from being essentially a successful economy? No. Has that in any way created roadblocks to the shift from a developing to a developed economy? The answer is no. It's more also a question of credit being available and available at a reasonable price. So gone are the days when interest rates used to be in those very high double digits. Today credit is available at an affordable rate. So it's quite natural that you will see some shift or some depletion in the savings rate, but that doesn't mean there's gloom and doom.